The Taiwanese index, which is lower in trade right now, 0.6% there.
A lot of the things that we had built into and baked into our original proposal needed to undergo a change.
The chairperson has acknowledged the data that was provided by the industry.
We are probably at the end of the steel price cut cycle in the domestic market.
The company has gone ahead and acquired a US-based CPaaS company called Kailera.
Yet another record high on the Nifty. The Nifty Bank is well up, close to around 150 points.
I expect normal, when we say 10 to 12% kind of returns from the large cap indices.
My opinion, we have reached a stage or inflection point almost, where there is critical mass around electronics manufacture.
And that inflation isn't going away in a hurry.
19,100 on the Nifty as we speak.
MCX had extended his contract with 63 Moon Technologies as a service provider yet again.
Ransomware group has gone ahead and claimed responsibility for the incident.
There were a big marquee investors who wanted the bigger piece of the company.
The Nifty up around 1% and the markets have extended the gains.
You're with us here on a fresh new edition of a Closing Bell, last hour of trade coming up. We are coming to you from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Rima and Surbi here in the studios, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon. The market following up with strong gains after day before yesterday's session, and I think that is heartening to see. So yesterday was a holiday. Day before was such a strong day where we basically hit 19,000, and today we are building on the gains. So strong gap up as the SGX was indicating, but more importantly after that we've only built on it. As we start this edition of 2:30, we are back at the day's high. 19,160 is the day high so far. We're practically there. This is the level we put out in the morning. The upper end of the rising channel is around 19,200, which is basically 40 points from where we are right now. You take that out, then you'll have to project higher levels. But 19,200 was the first number that we put out. On the way down, on the Nifty, just simply levels, I think perhaps you could keep as... But this is also now 200 points away because you're starting with such large gaps that any supports nearby... I mean, the 20-day is even further. The 40-day exponential is 18,874. And that perhaps is the closest that you can keep as a bit of a trailing reversal level. Bank Nifty is looking good. It's up about 0.95. It's actually picked up in the last 15 minutes of trade. That, based on Bollinger Bands, can head to 45,600. That's about 900,000 points away from where we are on the Bank Nifty. And on the Nifty Bank, again, the 40-day exponential comes in as a stop, which you perhaps could use. 44,100 is that level. That is a good 600 points away from where we are. Mid caps and small caps are higher, but it's interesting. They are lagging rather than leading what's happening on the Nifty and the Bank Nifty. Both those indices are up 1/3%, less than 0.5%, whereas the large cap frontline indices are up a full 1% respectively. Rima.
Aye, so the dream run continues on our markets, and the sustained inflows into the market is also driving a slew of block deals. Today I counted 7 block deals that have taken place in the market. The biggest one was Adani Transmission. You also had Bharti Airtel, where about 1.9 crore shares changed hands on, in the block window. Credit Axis, Grameen, TD Power, something we've been talking about. There was Godavari Power, Ease My Trip, where the promoters brought down their stake marginally. Bandhan Bank, 7 of them totally amounting to more than 7,000 crore rupees. Not just that, the IPO market is also very, very hot. Idea Forge has seen a total subscription of 70x. Sign DLM. The size of the IPO is about 600 crore rupees, 592 crores to be precise, and it's seen demand nearly 9.5, 10,000 crore rupees. So the capital inflows in the markets continue. It's chasing whatever supply is being put out there, either by institutional or the promoters. Global markets are also fairly upbeat. Pull up the early rates on the European markets. There you have it. Up anywhere between 0.5 to 0.7% right now in the CAC, DAX and the FTSE. Surbi, this Friday afternoon, this Wednesday, holiday on Thursday, Friday, it's reminding me of that song in Kal Ho Na Ho. Or maybe I'm getting the movie right, but movie wrong. But where's the party tonight? Which movie is it in?
party, I think it's probably the same movie. You are right on the movie. I think if the Bulls had their way, they would want to keep the market open on Saturday and Sunday.
That's what she said, right?
This is one Friday where the Bulls wouldn't complain if the market was open tomorrow. It's that kind of a market.
0.5% daily compounding interrupt rate.
But yeah, it's been phenomenal to say the least. And we're actually the better performing market in Asia. Europe, like you pointed out, Europe is actually doing very well. Most of those markets are at the day's high. But in terms of Asia, we are the big outperformers today. Some of the markets, particularly if you look at China, mainland China or Hong Kong, they've kind of eased off a little bit. But Europe is giving us good company. That was the Asian picture earlier in the morning. Okay, so back to our screen. The other thing is that this party or this bull charge, whatever you want to call it, it's so heady that there's hardly any stock that's sitting out. I mean, out of the Nifty 50, at least 45 stocks are decisively higher. I mean, properly in green territory. There are only 3 or 4 stocks that are actually negative. And the 3 key ones are on your screens right now. ICICI Bank, Adani Ports and Apollo Hospitals. They are the only ones where there's significant red, at least 1% or more. But otherwise, it's been a very well-rounded rally. Autos have led from the front, and that continues with the names like M&M. Of course, and there is IT. Infosys is leading that tally with a 33-point contribution. And of course, the HDFC Twins, TCS, there's literally no stopping. I just want to add the AMC stocks as well, because that's the other major headline of today's trading action. They've actually held on to the gains, whether you're looking at UTI AMC or you're looking at HDFC AMC, I mean, any of them. Most of those stocks are still up between 5% to as much as 12-13%. And that's on hopes that whenever we get this new proposal from SEBI, it will be, of course, way less onerous than what was being proposed earlier. So that's the AMC rally that's going on. But hey, Nigel, if the Bulls manage to keep the market open, will you be happy or sad about that? Hypothetical question. Don't worry. It's still a holiday. I'm reiterating that.
I need to party on the weekend. So, and I think Rima was talking about where's the party tonight. I think it is Kabhi Alvida Na Kehna. I think that was the movie.
Okay.
Where's the party tonight? Yeah, I think. But anyways, getting back to the markets, a beautiful looking screen, right? The only word of caution out here is on the PCR, and it overshoots on both sides. I've seen it even move towards 0.6 odd, so maybe it overshoots on the downside, that 0.7 odd. And on the upside, we're closer to around 1.5 now. Now, put writing is getting very, very easy. We've got a big data point coming out of the United States tonight. And there are some challenges on the domestic front as well. But the Bulls don't want to listen to any of that. For the time being, we're at the high point of the day. We had a 105 point gap up, and we're up close to around 150 points. So that's telling you we're building on the gains. The options data is looking quite interesting. The 2 most active strikes today is 19,100 put. So the put writers are feeling good. Premiums around 70 rupees approximately. And on the upside, 19,200 call. Well, that as well is fairly active. So you just plug in the 60 rupees and the 70 rupees out there. You'll get your broad range. You want the Nifty to hold on to the 19,030 odd mark on the downside. On the upside, 19,260 odd. That could be the next level you're watching out for on the upside. But how do you position yourself in the final hour of trade? Well, that's the big question. Mitesh Thakkar is back with us. Mitesh, what do you do if you held a long position, you have enjoyed it, big weekend coming up, book it or hold on to it or book some part of it?
Yes, we have enjoyed it. I mean, there's no doubt about it. The rally has been very broad-based, Nigel, and the good thing is that with the Bank Nifty participating, I think the Nifty has got an extra fillip. So I think no need to book it as yet because there's no sign of weakness. Of course, the weekend does carry a mild risk that if the overseas global markets are slightly weak, then you might get a weak opening. But I still believe that if there's a mildly weak opening, it will not disturb the trend. In fact, so therefore, I think the good idea would be to just trail your stop losses. On the Nifty, we have maintained 19,000. We'll now revise it to about 19,070 on the spot. And on the Bank Nifty, we'll take it up to about 44,490 on the spot. So just maintain your long positions. I do believe that there is a good chance that next week we'll also see fresh highs being made. With that, I think, we're clearly suggesting maintaining a long bias. On the stock side, I have a buy on Maruti and a buy on Godrej Industries. So Maruti, I would recommend buying with a stop below 9,700 for targets of 99.90. And Godrej Industries is something I like as well. That's a buy. Here I would recommend keeping the stop at about levels of 509 and a target of around 537.
Okay, got that, Mitesh. Thanks very much. We'll come back to you and get some more ideas maybe in the next half an hour or so. But for the time being, we'll move on and focus on some stocks that are in the news today. Biocon is the first stock on our radar. And it's been moving higher on the back of some strong volume data that we've picked up. Vivek is here with more details. Vivek, tell us what you're learning.
Well, Biocon, as you rightly mentioned, today up on very, very strong volumes. In fact, this week the stock is up almost 10%. And in fact, all of the trading sessions of this particular week, the stock has been on the gaining side. A couple of interesting updates. Bernstein recently wrote a report on Biocon. What they're saying in terms of the Q1 near-term expectations, in terms of the results, what is it that they are anticipating? They're saying expecting continued momentum in two key drugs, that is both Glargine as well as pegfilgrastim. Along with that, what they're saying is that the company has already gone ahead and responded to the US FDA with a comprehensive, complete response letter for an important molecule of theirs, which is aspart, which is used to treat diabetes. And what Bernstein says is that if that particular approval does come in, that could be a key catalyst as well. Apart from that, pharma stocks, when you're talking about pharma stocks, most of the pharma stocks have seen significant momentum. BofA Securities, in fact, has written a recent note where they're saying that the drug shortages in the US market have actually reached the highest level since calendar year 2014, and they believe this actually goes ahead and increases the dependence of the US market to go ahead and look at other opportunities or other markets like India as well as China to go ahead and outsource their drugs. So that has also been a significant trigger. Apart from that, another key point that most of the market participants are indicating is that there have been a couple of new fund launches, the latest one being Quant Mutual Fund, which has gone ahead and launched a Quant Healthcare Fund. And main point of this particular scheme is that it will go ahead and invest almost 80% in healthcare and healthcare-related stocks. All of these triggers of keeping the pharma stocks, and especially for today, Biocon quite active in the session.
Okay, got that. Thanks very much for that, Vivek. Indeed, what a rally we've seen in pharma. Just want to point out for the benefit of our viewers that in the month of June, the Nifty is up around 3.5%. The pharma index is one of the best performing with a gain of almost 8.5%. Actually, it's real estate and pharma. These are the two sectors that have done the best in the month of June. Well, let's take that question to Prakash Diwan. Then Prakash, hi, good afternoon and happy Friday to you. So what are your thoughts? I mean, it's been a breathtaking pharma rally pretty much across the board, really. And if you do have any specific views on Biocon, do share those with us as well.
Good afternoon, Sarvi. Thank you for having me on the show. And yes, I think, it's very evident that pharma and reality, the sectors that you pointed out, have joined into this momentum much later. And that's exactly why the month of June was where, the stellar move is visible. And I think on the pharma side, it probably would continue given the fact that it's a very broad-based sector. If you look at the BSE pharma, sectoral indices, very clearly it is a huge smattering of some 70 plus stocks. So it's not that, just a few stocks are shining and, the mid-sized ones are doing well. The large ones like Stan, Reddy's, all of them have started participating. And there are obvious reasons. The US is the outlook from the US on Indian companies, particularly the US FDA stranglehold that we had, is something which a lot of us know was possibly motivated by different factors than just quality consciousness or their core focus on regulatory stringency. But that is now likely to change given the fact that they need Indian pharma companies to supply a lot of the generics which they're running short of. And the competition from the European markets is much lower. The intensity is much lower. So what did them in was like the likes of Lupin and Sun actually faced a lot of damage, price damage, a lot of revenue damage in the US markets in the last couple of years. That's kind of, being retraced. So I would not be surprised if Sun Pharma continues to do very well, given that it has a significant footprint in areas which in products where things are looking up very brightly. The same goes for Lupin and of course, Dr. Reddy. So you have the large cap ones which would probably lead this brigade. Specifically on Biocon, Surbi, I think, I've always believed that more than Biocon, it's Syngene that holds a lot of promise. Biocon still has a lot of issues related to the kind of allocation that they made, the kind of return ratio they struggle to grow. But if you look at Syngene, which is also a key beneficiary of this entire thrust on biosimilars, it has had a spectacular, this change in its trajectory. The kind of stages at which some of its molecules would start reaching is so significant that from a research to a commercially very sound and robust model is what they're looking at moving to. And that is actually captured in the price to a large extent. If you see from 500 to about 750, the move has been very gradual, very consistent, and still it is underowned. So, of course, it's a small company, but I would put my money on Syngene if I had to look at something which is happening positive even on the parent. on the Biocon side. But the kind of alpha that you could generate on Syngene is significantly much more promising.
Prakash, do stay on. The sector of the day are the asset management companies, whether it's Nippon Life, HDFC AMC or UTI AMC. Big relief in sight as the SEBI has decided to reconsider the stringent TER total expense ratio that they were planning to impose on the mutual fund industry. Still Wednesday, most of these stocks were down 10 to 20% from their peak levels at a time when the market had gone on and hit fresh highs. So there was that headroom on the way up, which they have clearly conquered today. Let's go across to Surbhi to find out more about this development. Surbhi.
That's right, Rima. So SEBI chairperson has said that they will publish a new consultation paper on the TER, which is the total expense ratio regulations. And she further said that the mutual fund industry will be pleased to see the new draft TER regulations. Based on this, Kotak Institutional Equities has written that there is higher likelihood of regulatory stance that is easing on this AMC stocks, and it will, the new regulations will be less disruptive, which will aid their growth. They have reversed part of the accelerated TER cuts, and they have revised their earnings upwards already before the consultation paper is out. For Aditya Birla, Sun Life and UTI AMC, they have revised their FY24 up, estimates by 2%. For HDFC AMC, they have revised their FY24 estimates by 3%, and for Nippon AMC by 1%. They have an add rating for Aditya Birla, HDFC and Nippon, and they have a buy rating for UTI AMC.
Thank you for that. Prakash, anything looks interesting to you at these levels? The problem is today itself, it's run up 10-15%.
Oh, absolutely. So, yeah, I mean, I think all of them have very robust businesses. There's no reason for any disruption that could damage them. But, this relief was badly required because they got bashed out because of this anticipation of further cut in the TER. And I think the regulators too would have heard the industry in terms of, what is the need of the RH to expand. The distribution network is still, while it's large enough, it's still not reached, so many of our Indian savers. And the entire product range that you see from most asset management companies will undergo significant change as you get smarter products and use technology to reach out. So there is a lot of investment that will go into the business. So I'm happy that they have probably been left with more money to spend on development rather than worry about what kind of money they're making. So I think whoever has had a conviction to buy into these companies would probably be rewarded in the long run for sure. And this disruption will probably now become much more. I mean, there won't be any disruption, so you'll probably not even have hiccups. But am I going to buy any of these companies? My choice is more on the insurance place because they have a far richer market and an underpenetrated market to play on. So even with competition, there's no competition. So I would put my money into the insurers at this point in time.
Okay, what we'll do is we'll take a break, Prakash, but stay with us. The market is, above the high that we made early on, basically above 19,160. So it's super strong going with about 45 minutes of trade left for us. We'll see you on the other side. Prakash is with us, and we'll also have Dinshaw Irani join us on the other side of Helios Capital India to discuss stocks, strategies and themes that Dinshaw is betting on. Stay with us.
Welcome back. Okay, we're focusing on some more stocks that are in the news today. One such name is Karnataka Bank. See the stock rally today. We are talking almost 12%. It's been quite a stunning move, and it's at the day's high, this stock. That's today's performance, but it has been nothing short of breathtaking if you look at the last couple of months as well. This year, the stock is up 24-25%, and in the last 12 months, hold your breath, Karnataka Bank is up 200%, nearabouts. We caught up with the management today to understand how the business is shaping up, what the immediate focal points are like, and what the outlook is for the remainder of FY24. Let's listen into that commentary, and then we'll discuss the stock with Prakash.
We would believe that, between MSME, retail, and a whole lot of other gold and agri loans, and that's one thing that I didn't talk about, because the bank has also got lots of strength on the agri. We have over 100 AFOs in the market. And this basically would result in anywhere in the next 3 years crossing the 100,000 crore mark, which is for sure. We would, think that, the NIM would settle between anywhere because, as you're aware, the cost of deposits is always a challenge. And, that is something which is going to be, putting an impact on not only us, but all the banks. And so anywhere, a healthy 3.5 to 3.7 is what we would want to maintain. And I think we're quite confident on that.
All right, Prakash, what's your view on the bank, Karnataka Bank? The management saying all the right things. They want to diversify. They're focusing on the digital side of things. They want to move geographically as well, be well spread out, MSME, retail. And talking about currently the advance book, the loan book is close to 60,000 crores. They're saying in the next 3 years, it'll be more than 100,000 crores. And also NIMs between 3.5 to 3.7%. Pretty good commentary. Stock up 25% at around 190 rupees. What do you do with it?
I would still, feel good for people who have bought into it and watch it because, while all of this sounds very good, we've always seen in the past execution is not too easy, right? They're joining the party a bit late. You already have banks which are off the blocks and running and galloping at great speed. I don't see any reason why an IDFC First Bank would not clock some very, very stunningly good numbers as compared to what they've been doing. And that's where, and if you really want a turnaround of sorts or something which is still in the value zone, you would probably look at a Bank of Maharashtra, but of course it comes with that higher degree of risk being a smaller bank. So yeah, it's nice to see finally a large bank shape up and kind of join the entire, trajectory of growth that a lot of other banks have clocked. But I would not put my money into it now.
No, well put, Prakash. Thanks very much. It's done very well. A year to date, stocks up, I think, 26 odd percent. So, yeah, it's not done that well this year, but from the lows of last year, or even from the close of last year, it's done much better. 140 odd levels, 130 odd levels. It's come up to about nearly 200 now. That's Karnataka, but it's very, very strong guidance in terms of growing the loan book, basically, coming in. Now, thanks very much for joining us, Prakash. Good to have you with us here, and have a good weekend, and we'll see you back next week. Dinshaw Irani is joining us, Chief Investment Officer at Helios Capital India. Dinshaw, good to have you with us here. Thank you very much for your time. Just start with just a quick view on the market itself, Dinshaw. We had, we spoke with Samir on the day before yesterday, basically, when we hit that 19,000. He's not a big fan of all-time highs. He says, well, returns should be in the range of what we are used to over the last decade and a half or so. So eventually it'll roundabout be the same. Just your thoughts. How are you dealing with markets at a portfolio level? What have you been doing?
So thank you, Prashant, for having me on your show, and a very good afternoon to you and your viewers. So Prashant, the fact is that when you develop a portfolio, you obviously look at a big chunk being for the stability part and another chunk which gives you the real alpha as such. So that's how we mix and match. What we try to do, however, when we're building the portfolio is that make sure that our peg is at a very reasonable level, like less than 1 basically. So today it is at 0.6 or 0.7 despite the run up in the market. So that way we are very comfortable here. And obviously the big chunk which is pulling the peg down for us is financials. And we continue to be fairly gung-ho on the financials because, as we said earlier also, that financials partake in this whole consumption boom by not only funding the consumption, but also funding the capex for that consumption itself. Having talked about that, about the construction of the portfolio, about the market per se, the good part about the market at these all-time highs is that it still hasn't hit I mean, the valuations are still reasonable. If you look at the last 6 or 7 years, when things have really changed in India, I mean, I'm basically talking about the years after demon as such, when money started flowing into equity markets, mutual funds, and so on and so forth. So after that, if you look at the valuations, we're somewhere there, slightly more expensive. I mean, probably 5-6% more expensive than what the average valuations have been during that time period. So that gives us that comfort that we are not in a zone which is flashing red lights or such. I don't think it's amber also right now.
Dinshaw, afternoon, Rima here. Every year, it's either the IT or it's the banking sector which has driven the big alpha for the Indian markets. Last year, it was banks which outperformed the IT index by 47%. But the year before that, calendar year 21, calendar year 20, it was the IT index which outperformed banks by nearly 50%. And this trend goes on for the last 1 decade at least, the last 10 years, that it's either banks or IT which has generated the big alpha. Now, this year, in the first half of the year, there has hardly been any divergence between the banking and IT. Both of them have, got a middling performance. The Nifty Bank is up 4% year to date, while the Nifty IT index is up 3%. What have you made of that? Is this going to be a, kind of year where everything does well? It's, rising tide lifting all boats? Or do you think this divergence, one of the two sectors will outperform?
Well, Rima, our bet is on the banking sector, on the financial sector. Frankly, IT, I think, has... we cannot justify the rally that one has seen in the recent days in IT, especially given the fact that the June quarter, which will be announced very shortly, some numbers will be coming out in the next couple of weeks as such, you'll see that most of these IT guys are going to give you a negative sequential growth rate. This purely the worksheets that talk to us. You look at the way they came off the March quarter, which was all-time lows. I think that trend continued into the June quarter, and in fact, things have worsened if you listen to the commentary of the management as such. So we are not that keen. We don't think this is justified today. Whatever is happening in the IT space. So our feel is that it will be the banking space which will pull off. Obviously, there will be certain other pockets which will contribute, like consumption will be one pocket which will contribute, not the FMCG part though, but obviously the discretionary part, which is already happening in some of the spaces. So that's what our bets are, our big bets are right.
All right. Hi, Dinshaw. Good afternoon. Dinshaw, what's your view on the insurance space? I think you'll have some exposure out there, right? You'll still have?
Not really, Nigel. We're more or less out of that space per se. Even, in fact, during the time of the budget, when the announcement came through, we moved out totally.
Oh, okay.
Dinshaw, hi. So, markets at all-time highs. Tell us, are you doing more of the same, or are you also looking out for any new ideas? Is it still easy to find new ideas in the market given the run-up, or is it getting more difficult?
So, Subi, no, actually it's not. The market, that's a good part about our Indian markets. We got enough flavor and more in the market to look for ideas whenever we feel like. So we already working on a few. Actually, what you mentioned made a lot of sense also, because when this markets rallies, there are certain pockets which become fairly uncomfortable for us. As in the run-up has been sharp and there's no commensurate run-up in the fundamentals. So there we look at taking some money off the table, but it's more of the time goes into balancing the portfolio today. As in move out money from some real outperformers. Not move out the whole money, but at least reduce the balance, the weights in some, and then take out that money and put into fresh ideas which are coming by.
And ideas are coming at warp speed, right? There's so much going on, it's difficult to keep track.
Yeah, so they come at warp speed, but we take our time to evaluate our ideas. Yeah.
Well, there's no time to take. That's the problem. Because if you take time, it's too late. But how do you? As an institutional investor, you don't have to jump at everything as a fund. Which private investors can do. But what are you doing? How are you? Which are the new themes that you were talking about? Anything looking interesting, from here on?
So basically, we are now started evaluating on the infra space as such. I think that's one space which will do fairly well going forward as such. So we trying to find our ideas there, maybe look at some niche pairs and work that way. Obviously, outsourcing has been one big theme for us long, and we've been trying to play that too also. And then we remain with our two old themes of financials and consumption. That's how we're working it out.
Infra, could you give us a little more color? Where exactly in infra? I mean,
so basically, sure. Basically, any stock related to the capex cost. Our feel is that there have been 3 cycles which have got postponed on the private capex front. I mean, started with the elections of 14, where things got postponed. Then came demon, things got postponed, and again COVID, which postponed the infra push as such, probably the capex push from the private sector. So our belief is that anyone catering to that space should see a huge lump up of demand coming through in the next few years as such, because that's the space which is going to pick up. So that's what we are focusing on.
So size no bar, or you'd stick with the large ones, L&T and those, yeah.
Yeah, so that's an easier one to call out, right? I mean, L&T is on obvious bet for because he's in most of the industries. But obviously, there's no size bar for us, so we're looking for some more ideas within which people have identified. So
we had Mihir Vora of Max Life in the morning with us, who was making a similar kind of point that he likes. I mean, companies and contractors is one segment, specific segment within infrastructure that he was talking about.
No. We're not too keen on that space per se. No. Because when you deal with government entities, there are lots of slips between the cup and the lip. So that's why it's
Okay, got it. Well, different strokes for different folks, as they say, right? Thanks very much, Dinshaw. Appreciate you joining in, and thanks for taking out the time and being with us here. As always, have a good weekend. We'll see you back soon. Well, we'll take a quick commercial break here with news that I think the market is up 200 points, so 19,180 now. So I think from the previous high, we put on about 20 points more. Previous intraday high, we put on 20 points more. D-Street Chatter with Nimesh coming up, and of course our technical trading ideas, BDST trades with our technical expert lined up.
Welcome back. You're tuned in to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, the markets are on fire. It's a double century that we're sitting on. So it's a good time to get in. Nimesh, tell us, what are you picking up on D Street Chatter this time around? Flows are good?
Hi Nigel, flows are good and actually a good start to the July series as well. And the fact is that this rally is now led by the large cap names. So for the second day running, the large caps are actually outperforming the broader markets. That was the sense day before as well, right? Even in terms of flows, it looks like some bit of money is now shifting back to the large cap stocks. So that's been the trend today as well. I guess, there were multiple blocks as well. So that will have an impact on the flows in today's trade. It was a kind of a rush towards the last end. Technically, the trading window closes for a lot of the insiders and promoters starting today. So that block cannot happen now. But still, keep in mind, the non-institutions or the non-promoter category can still sell stakes. So that flow may still continue, at least in the run-up to the earnings season. So that's the overall feedback. In terms of sectors, NBFC stands out. So that's been a constant feedback as well, that within the financials, that is one sector which is well bid, and even in today's trade, those stocks are outperforming. On the other hand, the cement stocks have seen some bit of profit booking. But largely, the rally of the last few days is led by large caps, and looks like the flow is now shifting from mid caps to large caps from a larger institutional point of view.
Well, and Nimesh, the IPO market, right, on fire. The kind of subscription we're seeing for Idea Forge, they want to raise 300 crores. The last I checked, 91 times subscribed. So that means they've raised close to, the bids have come to 27,000 crores. So that's the kind of action. But what about individual
stocks? In grey market, Nigel, the stock is trading at almost a double the premium,
Absolutely.
right? So that's the kind of frenzy which is there for this particular IPO.
Absolutely. Let's talk about some of the listed stocks, though. What are you picking up, Nimesh? Plenty, right?
Plenty. So I'll start with first stock, which is HDFC AMC. It's just built up on the momentum, after a gap of opening and been huge volumes as well. In fact, there is an IFL note, alternatives note, and they believe that there is a very high probability now that the stock will get added to the MSCI in the August review. So there could be further passive buying if that turns out to be. So that's the reason why that momentum is continuing in HDFC AMC. The second stock is Sun Pharma. For the last many weeks now, there was a constant feedback that a large FI was a seller, and looks like that seems to be largely over now. With a small buy figure today, you're seeing a big move in that stock. So that's the reason why Sun Pharma is buzzing in trade on very small buy flows from the larger FIs. The third stock is Shilpa Medicare. Within the pharma names, this is one stock. Huge volumes on that stock. I believe some HNI desks are quite active in that stock. And generally, the feedback is that maybe we'll see some corporate development in Shilpa Medicare very soon. So that explains the move in Shilpa Medicare. And the last stock is Godavari Power and Ispat. I'd highlighted this a couple of days back as well, that I was expecting a large block. It's done. Some 50-60 lakh shares got traded today. And I believe in terms of seller, the promoter entity was a seller, and some large HNIs were buyer into this block. So the disclosures could be important in Godavari Power and Ispat.
Okay, Nimesh, thanks very much for that. So interesting list of stocks as always, and we'll come back to Nimesh later. Well, Mitesh is here to tell us what to buy or sell today for a reverse trade when we come back on Monday. Mitesh, what do you have?
TCS weaker than well is Prashant. That's a BTST with a stop at about 32.80 for targets of 33.30. And the other one which I like is Sun Pharma. I think Nimesh was just mentioning that. A very strong move yesterday, good follow through today. That's a BTST with a stop at 1,040 for targets of 1,075.
Okay, thank you very much for that. Let's invite Sudeep Bandyopadhyay, Group Chairman at Indie Trade Capital, on the show now. Sudeep, very often the best times to buy is when the negative news flow is at its peak. Look at asset management companies, right? You finally got that relief. You had bought into these stocks when initially it was proposed that there's going to be a TER which will subsume all costs. It will be a big negative. Profit estimates were slashed by close to about 30-35%. Today there is a lot of negative news flow on MCX. Because the extension of that technical contract with 63 moons is pretty much going to wipe out its entire profitability for this year. Motilal Oswal has brought down the EPS estimates by 69%. Would you reckon the price at 1,500 could be attractive over the long term? Not in the medium term, not in the near term, but could this be a stock that you could look at over the long term?
Rima, MCX and other market infrastructure companies are definitely a good bet from a portfolio point of view for long-term investors. So whether it's a CDSL or a BSE or MCX or any other listed market infrastructure players should be a good bet. Indian market is growing by leaps and bounds. The volume of trading is increasing on all the segments of the market, and the way the economy is moving, the way the FIIs and foreign investors are coming in, I'm pretty confident that volume at MCX will continue to grow by leaps and bounds. So, of course, for a long-term point of view, this is definitely a worthwhile pick and taking the opportunity of this correction, which is unfortunate. I mean, everybody was excited because they were moving to the TCS platform, and that hasn't happened. And at a very steep cost, they have kind of renewed the contract for 6 months. And this, 250 crore or 125 crore per quarter kind of wipes out the profit and whatever good thing they were expecting to happen. So yes, it's a bad situation as far as the counter is concerned now. And for a long-term investor, yes, it's a great opportunity to start accumulating MCX at these levels.
Okay, that's the call on MCX that has come in. Sudeep, hi, good afternoon. Today's been quite a day for asset management companies as well. It's somewhat like insurance. I don't know if the rally will be as strong or not, because if you remember, in February, when the tax changes happened, the market completely sold down insurance stocks. And then similarly, in May, when there was a proposal on TERs for AMCs, these stocks got hit quite hard. Now there's a relief rally on expectations that SEBI will maybe, become a little more generous. What is your sense? I mean, would you look at AMC stocks at all if you want to go beyond insurance, banks and NBFCs in the financial space?
Well, Surbhi, the way the financialization of saving is happening, mutual fund industry, AMC, does play a significant role. The volume of assets managed by them, it continuously growing up, and the way the predictions are, it will continue going up. But I won't recommend buying today or maybe on Monday because based on this SEBI not yet recommendation, but the SEBI chairperson's statements and the way she mentioned that the new proposals would be as per the likings of the industry, I think the market has got very excited. And of course, the TER, the proposal on TER was really worrisome, and that not coming and something which is more logical and more rational coming should be good for the industry. But the valuations, I think, are rich at this stage. And the predictions are that depending on which AMC we are talking about, the EPS the incremental EPS will be between 1 to 3%, assuming the TER norms stays favorable or the way they are. So I think I won't recommend a buy at this stage. Wait and watch. But of course, it's a great space to be in for the long term.
Okay, when we come back on Monday, we'll be dealing also with the auto sales numbers for the month of June. Rima, you've got expectations from Nomura, right?
Yes. So ahead of that, you're seeing a big rally in M&M. So M&M has moved up nearly 4%. You've got a 2.5% rally coming through in Bajaj Auto. The rest of the auto pack is also holding up pretty smartly, barring a Bajaj Auto. Bajaj Auto is the only one which is sulking a bit. Though it's trimmed some of the early morning losses, Bajaj Auto is still down, close to about 0.5%. Laying out the Nomura estimates, they're saying the passenger vehicle demand has been tepid in the month of May, in the month of June, especially in the small car segment. Discounts are inching up. So for Maruti, we're on the whole, they're anticipating just about an 8% year-on-year revenue growth, but month-on-month revenue sales will decline by 6%. Not revenues, we're talking about the monthly sales, and monthly sales for Maruti will decline 6%. For M&M, the auto sales are also seen quite tepid on a month-on-month basis, just up close to about 1%. So in the passenger vehicle segment, the demand is a bit sluggish, particularly small cars. Two-wheelers, the domestic demand is very strong, but exports are likely to still remain under pressure. So Bajaj Auto's total volumes are seen up 1% on a year-on-year basis, but if you break that up, it's the domestic volumes growth which is seen at 40%, but exports are likely to be down 35%. For TVS Motors as well, year-on-year, the monthly sales numbers will be up nearly 5%, but again, domestic strong at 27%, but exports are likely to be down 3%. Hero MotoCorp is the total sales seen up 3%. For Royal Enfield, given the capacity improvements, we are expecting the sales to pick up by 25%. Talking about the CV demand, MHCV demand has been quite resilient. So for Tata Motors, you are seeing a total sales decline of 5%, but if you do the internals there, MHCV is going to be pretty strong. LCV is a bit subdued. Exports for Tata Motors could be under pressure. Ashok Leyland, total sales up 1%. And for M&M, and that could explain perhaps the rally that we are seeing, the tractor numbers are likely to remain quite strong, Given the seasonality on a month-on-month basis, Nomura is expecting tractor sales to go up by nearly 20%.
Okay, all right. So that's the report card on the auto side, and we will, of course, start getting numbers come next week. Sudeep, autos have had a fantastic rally in the last couple of months. We've seen most of these stocks simply fly away. So given this run-up, do you have any preference out there? What would you look at? I mean, Bajaj has been, for instance, one of the best performers on the Nifty. Would you look at a Maruti? I mean, how do you cut up the auto space?
Well, I think if I have to necessarily look at auto, I will look at Maruti definitely. Considering the way many of the other stocks, including M&M, has run up, I think my vote will go to Maruti. I think one can definitely look at acquiring Maruti at current levels. M&M, of course, continues to remain a favorite, but it has run up quite a bit. So there is no hurry to buy it. Maybe some correction can be an opportunity to again get into M&M. But I'd like to make one point, Surbi, is that probably it's a great time to look at some of the auto ancillary companies where there has been some pressure and they haven't run up significantly. Bharat Forge is one stock which I'll definitely request investors to look at. There can be some challenges in US large vehicle space where they are significant player. But apart from whatever is happening in all other segments of the business, I think it has got a significant defense component. And looking at what has happened to all the other defense plays, I think Bharat Forge has a long way to go. So yeah, auto ancillary come defense play, Bharat Forge can be looked at.
All right, Sudeep, I wanted to ask you about the big boy. Actually, the big underperformer in the last few years has been the HDFC twins. However, this month, after a very, very long time, they have been actually the outperformers. If I look at a month-to-date chart, HDFC and HDFC Bank, both of them had outperformed the Nifty. That's something we haven't seen in many, many weeks, actually. So, that's the kind of move that we're seeing, and that's what's leading the markets higher as well. Do you think the time has come now for the HDFC Bank merged entity to outperform?
Absolutely, Nigel. I think, it was very clear for some time that there has to be a time when there will be a valuation pickup, and vis-a-vis other large private sector peers, they were definitely lagging, and this had to get, kind of bridged at some point of time, and that's pretty much what is happening. The merged 18 lakh crore balance sheet is a significant, strength for the merged bank. And, there were concerns over the liability and how that will be managed and things like that. But I think the bank has been taking aggressive steps towards gathering more liability to handle once the housing mortgage book comes in. Also, in a merger, sometimes there are questions about human resource issues, but in the overall context, about 4,000 employees of HDFC Limited, vis-a-vis 150,000 plus of the bank, I think it's a very, very small, human resource related challenge, which becomes a big challenge in many mergers. So I think this is a great opportunity. The bank also will start hopefully aggressively selling mortgages through all the branches, and that should help the overall mortgage business as well. The technology challenges which the bank had and RBI also had come down heavily on them is a thing of the past. So overall, I see no reason why HDFC Bank will not start attracting the kind of valuation vis-a-vis its peers, which it was attracting, say, about 2 years back.
We chatted with a Bernstein analyst on the merger between HDFC Bank and HDFC Limited. We asked him, will it be difficult for such a behemoth to continue growing at the rate they have been? And he doesn't believe at all. He's like, the deposit mobilization is going to be strong. And once corporate lending picks up, he believes the merged entity will have a right to win given its scale. So he was very bullish about the merger prospects. But Sudeep, do stay on. Need to slip into a very short break. Here is a quick programming note. Our weekend special, Editors Roundtable, is coming up today at 4:30 p.m. Let's get you a sneak preview of what are the big themes on the show. As the market hits all-time highs, one obvious question is, which among banks or IT will provide leadership from here on? Anuj will take us through some interesting data points from a Motilal Oswal report and try to answer this question.
Despite the dismal March quarter, IT stocks continue to remain resilient, with the Nifty IT index up 3% versus the Nifty gain of 5%. we put the spotlight on why investors are holding out hope for IT.
Post the recent run-up in the market, analysts have started downgrading stocks as re-rating has been too fast and too soon in many of them. Nimesh will get us a list of all the recent downgrades on blue-chip momentum stocks.
Foreign investors are cutting back their China exposure. Many believe that the China plus one theme is going to be a big structural driver for foreign flows into India. Prashant will get us a quick explainer.
Nifty bounced back and clocked in gains in the first half of this calendar year after a big fight back in Q2 CY23. Nigel will run us through the big movers, but as history suggests, bulls hope H2 calendar year 23 will be different. So don't forget to tune in to CNBC TV18 at 4:30 p.m.
Okay, there's 5 minutes to go for the market closing. We're up 225 points. No let up whatsoever. I mean, going into the weekend with, how should I put it, no care in the world. At the high point of the day at 19,200. Super, super strong day today after, of course, what we saw day before yesterday. Sudeep is still with us. Sudeep, I don't know if you track a company like Ethos, which is a premium watch retailer. Have you tracked it, owned it ever? Any thoughts? 10% in 2 days. 5-6% day before and 6 today again.
Well, I don't specifically track, Prashant, but overall consumption area is very hot. And I think pretty much what's happening in Titan, what's happening in other consumption-related stocks is brushing onto this. And the way the money is pouring into India and the way the consumption stocks have multiples in India, I think some of these consumption names, which were a little not mainstream, are expected to see some excitement. And I think that's what pretty much is happening in ethos.
Okay, I think, that it gets us to the close on this discussion. Sudeep, good to have you with us here as always on CNBC. Thank you very much for your time. Well, I think let's just quickly start wrapping. I'll do just the indices and then toss it to Rima here. So we are ending 1.25% higher. For the week, it's a 3% gain on the Nifty. You look at what's happening on the Bank Nifty, that's for the daily and weekly, 1% today. And for the week, with a holiday in between, it's 2.5%, so a little less than what we saw on the Nifty. Mid-cap and small-cap indices, 0.65 today, so picked up pace in the last 60 minutes of trade. For the week, the mid-cap index is up 2.75%. And I think the small-cap index 0.5% higher, so lagging a little bit today. But for the week, 2%. Again, lagging for the week as well. So the strongest out of the four indices I mentioned, Nifty, the mid-cap comes in at number 2, Bank Nifty, and then you've got the small-cap index there, which has done so well, but it's now starting to not stall. 2% is nothing to scoff at for the week, but it's basically at similar levels at the high point of the previous week. Rima.
Well, and today we touched the 19,200 mark as well. 19,201 is now the new all-time high on the market, and we're pretty much closing at the day's high. The big gainers: M&M, Hero MotoCorp in the auto pack. IT led from the front, led by Infosys, TCS. L&T was a big mover with a rally of 2.5%. In the pharma pack, it's Sun Pharma, which stands out. IndusInd Bank gets the top honors in the banking pack. On the losing side, Adani Port slips about 2%. Apollo Hospitals was a bit subdued in trade. Bajaj Auto is down 0.5% ahead of the monthly sales numbers tomorrow. ICICI Bank didn't participate, so it opened in the green, but by the close of trade, it was down close to about 0.4%. But not too much to complain, not too many stocks in the red.
Oh, not too much to complain at all, considering how the markets closed up practically at the highest levels of the day. So it's really all guns blazing. Today, the mid-cap index did take a backseat. It was once again all about the big boys today, because you have the mid-cap index up 0.6% versus the Nifty's rally of almost 1.2%. The advanced decline ratio was still healthy, though. You have over 1,600 stocks advancing, 1,300 odd declining. So I'll quickly talk about some of the major movers and shakers. In terms of the key gainers today, of course, the AMCs have been a big talking point. So let's pull them up for you. The final tally on HDFC AMC is about 12%. Nippon Life about 12% again. UTI AMC 8%. Aditya Birla Sun Life AMC flattened out. It was the lowest performing of the lot. Pretty much fizzled out in terms of the gains. Anyway, let's stick to the gainers then and talk about some of the other key movers and shakers. In terms of the action, 63 moves, of course, because of that tie-up with MCX. MCX was trending lower, down about 10-11%. 63 moons. Well, it was really up and away on this one stock, a gain of almost 12%. Indiabulls, Housing, Karnataka Bank, Bajaj Hindustan, Biocon up 8%. Big one there. JNK Bank, JK Tyre, 14-15%. JBM Auto, 8-9%. It's just a really, really long list of winners that we can go on and on with. But overall, not a bad session for the mid-cap market. And of course, for the Nifty and for the Bank Nifty, it was gains pretty much all the way. So we are ending the week, just to kind of wrap up the action, with the Nifty in just 4 trading sessions, seeing a gain of almost 2.8%. The Bank Nifty has seen a gain of about 2.5%, and the mid-cap index also going home with decent winning. So not a bad week at all.
A sparkling one, you would say, but need to slip into a break. But on the other side, a very interesting conversation with Manish Chokhani of Enam Holding comes up. Stay tuned.